I think I'm right in saying if we just pick out AMD as an example, it's one name that you have exposure to or that you hold. You know, the Journal is reporting one specific industry case of a much broader thing where China wants its domestic entities to use domestic chips. Your response to that?
Well, you know, I would put a little bit of this into context. China, top down, urging foreign chips and telcos. We don't see it as being, you know, a huge change, because essentially that's a market that has been dominated by Huawei, and the use of those and the use of in-house chips has been around for a number of years now, since chip companies were banned from supporting Huawei's 5G rollout. And really, in terms of China telco 5G spend, that actually peaked some time ago. And other areas like FPGAs, you know, they've had a significant inventory correction. And for, you know, China, who may want to replace US chips, but again, you know, actually using 7-nanometer chips domestically, they don't have that supply yet. So I think for them to get to 5-nanometer or 3-nanometer, you're going to need those for 6G deployment, which will ultimately need US chips by that time period. So, you know, we think this is ongoing wrangling, but in terms of the end markets, it's not hugely significant for the areas that we're focused on.
Let's go to where you're focused, therefore, Alison, because all of this comes in a current context of a threat over supply. We are all envisioning a whole new world in which we're going to be living in thanks to generative artificial intelligence, but we need the chips, we need the supply chain, we need to be building these things, we need the energy. Alison, what chip names are going to be doing well in spite of geopolitical headwinds?
Well, you know, when I started looking at technology stocks back in 1996, I think about over a third of chip supply was actually built in the US, over 30%. And went forward to the pandemic, and that was down to 12%. So we see this ongoing focus of deglobalization that is part of national security. It's part of national interest for AI. It's also part of the overall focus on improving supply chain standards, ESG standards throughout the technology supply chain. And therefore, we think that actually manufacturing is becoming a more competitive advantage, more difficult to replicate. Many contract manufacturers, for example, Jabil, Flextronic, the ability to be able to manufacture at scale. These companies have much lower margins, and traditionally that could be easily moved around from competitors, but that's now becoming much more difficult at scale for many of the large OEMs to actually move their manufacturing capacity around. Yeah. So we think that's one way that we see deglobalization, the CHIPS Act, actually play into where companies manufacture.
As a global technology leaders and sustainable future tech fund, then, do you worry that you're going to have to be sacrificing margin on some of the companies that you're investing in globally because they're having to, you know, manufacture in more expensive places to secure supply chain? Or can you start to play out, well, opportunities more globally that are being overlooked as we've all just focused in on a so-called Magnificent Seven?
Yeah, I mean, I think there's you know, a significant focus on margins and efficiency. You know, the Morgan Stanley Technology Conference in March showed that, where, you know, the two most named terms from all of the presentations at that conference weren't AI, it wasn't CHIPS Act, it was in fact margins and efficiency. And you see, you know, I think that's one of the really interesting aspects of where we are just now, because we have a major new technology wave, but that's also hitting at a time when, you know, we have this rising cost of capital, and companies are really focused on efficiencies and improving margins, and that creates really interesting opportunities for investors. And it's a real stock pickers market, so it's not easy to generalize on subsectors. It's very much about, you know, active management, which is quite typical when we hit these technology inflection points.
In this stock pickers market, should you pick Apple? Apple is becoming increasingly attractive, it seems, to you guys 12-month forward PE of 25 times. It had been downtrodden. Now, is it a good name?
We own Apple within our portfolio, but it's not been one of our largest holdings for quite some time. Apple's a tremendous company. It led technology in each of the last three waves, you know, through the PC wave, the mobile internet. They were all really started by product catalysts from Apple. This AI wave was started by the product catalysts of Microsoft on ChatGPT and OpenAI, and also NVIDIA on silicon. And Apple's role in AI has yet to be defined, and we're sure that over the longer term, they will continue to innovate. But right now, they're not one of the early drivers of this generative AI wave.